Let's look at understanding the information systems. In looking at understanding the information systems, we can approach that understanding as understanding beyond debits and credits. To show understanding beyond debits and credit, we can look at the contemporary business models. The business models have shifted to online platforms. A classic example of this is Amazon bookstores. Amazon sells books online, and the example I have taken here is Amazon selling books online in the French market. The French has a love for books and have fixed prices on books on their bookstores. And Amazon has entered the French market on the online platform. When Amazon entered the French market, where the French domestic market competes on fixed prices, the French law changed in such a way that Amazon should also have fixed prices in the French market. In order to compete in the French market, what Amazon did was it lowered the shipping costs. And most taxes that it pays is in Luxembourg because it's the tax-paying country for Amazon, and it's a low tax-paying country. But when that happened, French law changed again because the business model has a competitive advantage here where it is paying lower taxes, but it's not paying taxes for the French government for the books it is selling in France, and also competing with the lower shipping costs. So the French government came back to introduce and ask Amazon to pay the tax as a resident in France. What we can see from this example is that the online environment and transacting on an online environment has certain benefits and challenges. And there's the evolution of various business models coming out to take advantage of the online environment. The second is that the French market and the French bookstores had to compete with the online suppliers, and they had to come up with an alternative business model to compete with the online bookstores. And what they did was that they, instead of people buying books online, they encourage people to come to the bookstore and then order books online. By coming to the bookstore, people then have an opportunity to look at other books and then buy other books as well. The second was that they changed the bookstores, where the bookstores is far more relaxing and they can spend more time in a bookstore rather than going on an online platform and ordering a book in 2 minutes' time. When people come to the bookstore, it becomes a cultural, social experience where they spend time, and they normally spend about 1 hour. So we can see here that the business models are competing with each other. Those business models that work on an online platform and those business models that works on the ground are competing with each other using various features and propositions. This brings us to the various challenges that accountants has to embrace. Today, the accountants have to manage information and measure information. They have become information managers and information measurers for businesses to create value for the business. They are also engaged in governing the business and identifying and mitigating enterprise risk for the business. Whether it is online environment or whether it is on-ground environment, there are various risk fluctuations to the sales and costs. And it is accountant's role to understand how to govern, identify, and mitigate these variations or the risk so that it can create value propositions for the enterprise. In a business situation, what is valuable for the business is creating market value. But it could be different for another enterprise, like a social enterprise, where they have to create a different types of value. What is valuable for a social enterprise could be reputation. And the value creation proposition there is different from a value creation proposition for a profit-making enterprise. But accountants play a crucial role in these two aspects. When we talk about information, there are three aspects that becomes important. First is data. Second is the processes that are involved. The third are the controls or the risk management. Let's look at the first. Data. Data means the facts or the units of information. Data could be generated internally or externally. An example of data is a price. It's a unit of information. Or a sale that is made. It's a unit of information made externally with this external interaction, whereas the price is internal because it's internally determined. The second aspect are the processes. The processes are the activities undertaken. For example, sales is an activity undertaken by an enterprise. And when these activities are undertaken, it generates data or units of information. These units of information related to sales are products, prices, and locations in which they are sold. Then the third aspect is the controls that the enterprise should have to manage risk. These controls are applied to processes. They include application of systems as well. Because these processes accompany various systems, they get the support of systems to conduct various activities. An example of processes are selling activity, a recording activity. But we need to understand from accounting perspective what sort of controls that we have in place for the selling activity and for the recording activity to manage its risk or variations. To have these controls, one type of control or one aspect of control are called pervasive controls. They are the controls that have wide effects. For example, when enterprise makes a sale or engage in the sales activity, it will conduct custom credit checks. And it conduct for all sales. So it's a pervasive control activity. Because by conducting custom credit checks, it can manage the accounts receivable. It can decrease the bad debts by selling to customers who can afford to pay and who are likely to pay when they buy on credit. Here's an example of a basic sales process with 5 activities involved. In the sales process, the first is salespeople enter customer orders. When the customer orders are entered, that's the first activity. The second activity is to invoice customers, and it's an accounting activity. And then when it is invoiced to the customer, that's been informed to the warehouse about the order that has been made, and then the warehouse will assemble the order. And that assembled order is then sent to the shipping department to send it to the customer. Once it is been dispatched, a copy of that dispatch will go to the accounting, and the accounting will make a record of that order that was previously placed and the dispatch that was made. Because once it is dispatched and once the customer has received the goods and is satisfied, there is money that's due. A sale is recorded and there is accounts receivable that has to be managed. And that managing accounts receivable is to decrease the risk, to ensure that sale is realized as cash. An information system Control is relating to data and processes. Data are the units of information, and the processes are the activities undertaken. There are three aspects of control. We first previously visited the pervasive control. Now we can expand that into other types of controls. Application control. Application control is enacted through operational management. When operating an enterprise, there's data or units of information. An example is a sales order. When there is a sales order, there has to be activities conducted to generate this order. So there's order and there's activities conducted. But we must have controls. The order is properly created, generated, and the activities are properly conducted. And we have controls in place to manage any variations or errors and omissions or frauds, to manage risk. The second aspect of control are the process controls. It is again enacted through operational management. When there is a sales order, there are activities that's undertaken. But in these activities, we need to ensure who is authorized, who is there to authorize this order, and who enters this order in the accounting system or the enterprise system. Preferably to segregate these duties. Two separate people must do it. And these two people, we must try to ensure there is little collusion occurring, or we manage collusion between these two people. The third aspect are the pervasive controls. Pervasive controls are the enterprise-wide controls. These controls come through the governance structure of the strategic management. These controls come through the deliberations, through the board of directors, through the strategic vision and the strategic goals of the enterprise. They often originate from the policies that the enterprise have. For example, data about sales orders, the unit of information about sales order. So there should be policy or rules for accepting an order so that everyone knows, whoever who is accepting order, these are the rules that the enterprise follows. And then there should be activities that is undertaken, and these activities, who should be authorized? Who should authorize an order? Who should enter order data into the system is decided through these rules. So we talked about data. Data are units of information. And these data are converted into information. Information is what is it? And its information is data or units of data put together to make meaning. These meanings arise and this data are embedded in events and objects. Let's look at these forms of data or units of information. These units of information are visuals, numbers, and auditory or sound. These units of information are items that we can perceive from senses. Visuals we can see, numbers we can read, sound we can hear. And they become units of information or data. And these data are often embedded in objects. The objects that we come across, and these objects are audios, videos, pictures, and they are also embedded in events, in various occurrences, various things that happen about resources of interest to the enterprise. And these events could be a sale is made or a purchase occurred. And this data are embedded in these events. So therefore, objects and events contain data or units of information, and these objects and events become a platform for us to generate information. So we talked about information. We also touched base on controls. These controls are the risk or the inaccuracies that can occur. And these inaccuracies could be governed or managed through policies and procedures of the enterprise. There are two types of controls. One is the system-wide controls or the pervasive controls, which are the policies or the rules of the enterprise. And they have been checked or audited or reviewed for compliance. The second are the processes or the procedures that the enterprise has developed based on the rules. The processes are activities that are grouped together to conduct a sales, which is a process. There's a group of activities that we have to bring together. So these groups of activities relate to ordering, then invoicing, selling, and collecting cash, and so forth. These process controls are also audited, reviewed for compliance. So there's pervasive controls and process controls, or controls relating to policies, or control relating to procedures. So an enterprise system tries to integrate this information. Information is what it's about. A typical enterprise is arranged based on functions it conducts. We can identify or classify these functions in an enterprise, typical functions as finance, marketing, purchasing, and human resources. But an enterprise system, because all these functions are occurring in the enterprise, an enterprise system will bring together information relating to them into one common place. In a digital environment, we use various software and hardware to do that. The second aspect is many of these enterprises today conduct their activities electronically. They are called e-business. They integrate information by linking processes across functional areas. When Amazon conducts its activities of buying and selling books, it has to liaise with suppliers to get the books. Then it has to sell these books to the customers. So it has to purchase the books. Probably it might also undertake to produce these books, but it also need human resources or the staff to manage it. It will do marketing about the books. When it sells the books, it has to collect cash from customers and record the sales, and that's done by finance. But all these functional areas require controls. Because all these functional areas undertake various processes or activities. We talked about governance, and the governance must provide reasonable assurance that these activities are conducted in such a way that it manages the risk or the variations that could possibly occur due to errors, omissions, and fraud. So in the contemporary business environment, enterprise environment, although activities are undertaken by the functional areas in a typical traditional manner in many of these enterprises, but the data or the units of information that's produced, they are brought together into a common place. And that common place is called an enterprise resource planning system. It's a software that does that. The software can talk to different functional areas, connects with those functional areas, and then bring those data, connect those data into the enterprise planning system, enterprise resource planning or ERP system. There are different types of ERP systems that are available in the market. There's so many. Examples are Microsoft Dynamics 365, SAP Business One, then Oracle. But all they do is to bring this information, bring this data into a center point. Once it is in a center point, it enables the enterprise to do lots of things with this data or units of information. It can rearrange or connect these units of information to make meaning or to create information so that it can make good decisions, valuable decisions, to create value as the enterprise wants. In an enterprise accounting information systems, there are three aspects. There's enterprise resource plan or ERP. It is that enterprise ERP that integrates the information, that brings information from the functional areas, connects the functional areas into a center place. And the enterprises undertake activities on electronic platforms and conduct electronically its e-business. And therefore, these connections activities take place on electronic platform. The processes undertaken are electronic. Activities undertaken are contextually electronic. So the controls that the enterprise should have to manage risk are in the light of the digital enterprise system. Acknowledging the fact that these processes are undertaken on electronic context, and these data that are generated by functional areas are brought together into an ERP or electronic resource planning system. Something that we must talk about when we talk about controls are the Sarbanes-Oxley Act that came into effect in 2022. It's an important piece of legislation that was passed by the US Congress to protect investors from the public companies from fraudulent reporting. This was a response to the frauds and corporate collapses that were taking place. Section 404 of Sarbanes-Oxley Act and the newly created, as a result of the Sarbanes-Oxley Act, there was a body not for profit, a body that was created called PCAOB, Public Company Accounting Oversight Board. Auditing Standard number 53 have made many changes for auditors and companies that they audit. The PCAOB was one of the special institutions that came into effect to combat fraudulent reporting, because previously the profession, the accounting profession, and the audit was self-regulated, and this was the first time in history that there was government intervention and said, well, we will have a supra body that will audit the auditors. Because seemingly they were not satisfactorily conducting or combating the fraudulent reporting. To comply with Sarbanes-Oxley Act, the management now must identify, document, and evaluate significant internal controls of the risk management controls, how they're managing risk. Section 409 of the Sarbanes-Oxley Act requires disclosure to the public on a rapid and current basis of material changes in an enterprise's financial condition. Today it is facilitated by the electronic or the digital ecosystem. And the way accounting is conducted, because it is timely, online, real time, therefore we have updated information. Enterprise would have updated information about their financial affairs, which it can report quite quickly to the public, often on a pro forma basis, not completely audited, but on subjected to audit. An enterprise's accounting information system can support this activity by producing financial data in a timely and accurate manner. When we talk about accounting information systems, there are 7 elements that we must consider. These 7 elements, the first is about the technology. We must appreciate the enterprise's hardware and software. The second are the databases. Where are these data are stored? We talked about the resource planning system enterprise resource planning system where the data is can be connected from functional areas into a center place. So that means an enterprise resource planning system can facilitate bringing data and collecting data and, and build a database. The third is about reporting. By doing that, by having a central database, the enterprise can determine who should get what information and how much. So a junior person who is in the operations will get some information that is relevant to that person's portfolio of activities. Another person who is in governance would get information that's relevant to their portfolio of activities. So that one would get different types of information depending on the type of decisions that they have to make. Because that's what is relevant to them. The fourth, about the controls. We talked about the controls that the enterprise should have to mitigate risk. In an electronic system, typical controls are who can enter into the system. So the passwords would act as a control or barrier. Then the biometric identification is far more advanced a control where the person is visually identified and be monitored either through facial features or through thumbprints. Could be controlled through the movements, the person being there at a workplace or on a certain activity, or the time they enter the enterprise and the time they leave the enterprise. And there could be compliance reviews where the internal audit team or an external audit team would undertake various compliance in relation to whether it has complied with the policies that the board of directors have designed for the enterprise and the procedures it has designed for processes. And the audits that are undertaken in relation to the legislation, complying with the legislation and accounting standards and other types of standards like environmental standards and so forth. The fifth are the business processes or the enterprise processes. There are various activities undertaken related to resources, using resources in the enterprise. The sixth is the management decision making, the types of decisions made and who makes such decisions. The seventh, in accounting information systems, is about systems development and operation. Various systems have to be developed in relation to the life cycle of products or the activities and so forth. And the systems will have to change depending on the products that it sells or it terminates or the new products that's been introduced and so forth. So the systems development and operation is not a static activity. It is an evolving activity because the products have a life cycle. It has a starting point and then it has an ending point over a time period. It might go out of flavor to the customer and then has to be replaced with a new product for an ongoing enterprise. What is an accounting information system? An accounting information system, when we talk about accounting information system, it's good for us first to look at what is an information system or a management information system. These systems are man-made. And system has parts that are integrated. And in a digital environment, these are computer-based components. And sometimes there are also manual components, but they're integrated in an enterprise. They're established to collect, store, and manage data and to provide output of information to users. In an accounting information system, it is a specialized subsystem of an information system in an enterprise. Accounting information system is about accounting information about the enterprise. In a typical environment, digital ecosystem, enterprise that has functional areas like accounts, marketing, purchasing, warehousing, shipping. They require a digital ecosystem. They operate in a digital environment. The enterprise resource planning system should bring the data that's relating to various functional areas into a center. There are logical components of a business process. There are three processes that are relevant to an enterprise: information processes, management processes, and operation processes. Information processes is about processing data that are relevant to making useful decisions. Management processes are about controlling the operations to ensure that the data or the unit of information that's been produced are valid, accurate, and comprehensive. The operation processes are there to accomplish enterprises' objectives, and these objectives could be the budgetary objectives, could be strategic objectives, or could be objectives that are set by the vision, mission, and goals. Often they are related to the strategic goals. And the operation processes ensures that the activities conducted are effective, efficient, and secure. So three processes or activity domains. And these activity domains are the three larger processes. They interact, they are not, although we talk in isolation, they are interconnected. Management uses of information. There are 7 qualities that I express in the COBIT framework or the control objectives for information and related technologies framework. And these qualities, information qualities, that makes or helps to make useful decisions. The first one is about effective information. That means this information meets the needs of users with as relevant, timely information, and they're comparable, predictive, and understandable. The second criteria is the efficient information. They are obtained and can be used in an easier way. The third is about integrity. It relates to the information is free of errors and they're complete. And the fourth is the reliable information. That refers that the information is true and credible. The fifth is the availability of information, that this information is accessible. The sixth is the confidentiality of information. Although information is accessible, it has restricted access because information is confidential. It has value and that can be misused in the wrong hands. Seventh is compliance, that it conforms to agreed specifications. There are 3 steps in making decisions with information. The first is about the intelligence. That means there should be information. Information relating to the organization that's generated within the enterprise. Also information that is available in the environment that's relevant to the enterprise. For example, industry comparable data that is externally available, not generated within the enterprise, is also relevant to make intelligent decisions by the enterprise. The second is the design. Is the design to use this information to invent, to develop, test various courses of actions so that the enterprise can improve upon the processes that it's undertaking. The third is the choices it can make at a given time An enterprise can make various choices, but it must choose the best course of action that suits the enterprise to attain its stated aims. So, when we talk about information and decisions, there are various layers we have to talk about. There are operations and the business event processing that is taking place at the lowest most layer. That's where the information or the data is generated through events by processing these events relevant to the business and the operations that it undertakes. And this data has to be managed through operations. And this managing this data could be for the short term, which is the tactical management, or for the long term, which is the strategic management. So there's information flow that is taking place from now to the future. There's also horizontally information is flowing across time where information is gathered. Lower the information at the lower strata of the information, they're structured information. They're well defined, they are often internal information, they're detailed, historical information, they're frequently occurring, they're more accurate. For example, a sales. It's well defined. Through the controls that we have, it is well defined the rules of sales through the policies and the procedures that we need to adopt to undertake a sale activity. It is internally designed. It is detailed because the board of directors have come up with detailed policy and procedures. We have sales information in the past which helps us to guide us into the future. Sales is an activity or process that occurs frequently. Therefore, we can become more accurate about the sales process and the activities undertaken related to the sales process. Then there's information that relates to the future, and they're about the strategic goals. They're about unstructured decisions. Because we're dealing with the future, they're undefined. We also have to look at the external environment. Often the information is not complete, they're summarized, or they're scattered, they're about future, they're not so frequent because they're forecasts and they're less accurate. But we have to make decisions. Enterprise has to make decisions for now and into the future. Therefore, structured information helps us to make structured decisions well. But we also need unstructured information and structured information to make unstructured decisions about the future. So the accountant's role in a digital ecosystem has changed. Accountant has become a designer of the enterprise. Enterprise information and about making decisions. Second is accountant has become the user of information. How to use this information? Well, to create what is valuable to the enterprise. That has value to the enterprise, to create value for the enterprise. The third is the accountant plays the role of an auditor to manage the risk by designing controls, applying controls, and reporting the findings to improve the control environment.